Hey everyone, this is Steve Peterson with Infinity Investments, and we're coming to you today with analyzing the current real estate market presentation. This was a webinar we tried to do a week ago. I'm terribly sorry for anyone who attempted to log in. We had a very bad audio error within the hard drive of my device. And so we are pre-recording this information, but I wanted to make sure we got it right and we got it out to you because I believe the content is truly relevant. So we're going to be talking about analyzing the current real estate market, and the topic or theme of the presentation is going to be based on a book that was written by a guy by the name of Craig Hall, a real estate investor who's been in the business since the 60s and has seen about 6 or 7 different market cycles. Real estate, just like everything else, runs in cycles, okay? So I started doing this presentation on timing the real estate market about 18 months ago. I read the book at a CCIM book club, thought it was very relevant, and I thought that we were kind of about 18 months ago nearing what I saw as like the peak of the market. And so this will be actually my 5th time doing a presentation where I'm talking about the principles in this book. However, I'm then going to transition to some key indicators to help you to make investment decisions regardless of the situation. And I'm going to end the presentation on what's going on in today's market with the pandemic and its surrounding effects. And I'm going to wrap up with some guidance and just some ideas that I think might serve you well going in the future. So just a little bit about myself. Again, my name is Steve Peterson. My company is Infinity Investments. We're a commercial real estate brokerage and investment firm. Was started in November 2009. So if anybody was doing real estate or business at that point in time, you remember how crazy it was at that point in time. Although there was a lot of opportunity. So, I see there are some similarities between then and now, but there's some vast differences. I've also served as the president of the California Association of Real Estate Brokers, which is known as KRAB, in 2017 and 18. I was the past president of NorCal CCIM in 2018. Also, I was the president of the Associated Real Property Brokers in 2015 and 2017. If you don't know, ARPB and KRAB, they are the state and local boards of NARAB, the National Association of Real Estate Brokers, which is the Black Real Estate Brokerage Association. We are called realtists as opposed to realtors. If you don't know, back in the day, blacks and other minorities were not allowed to join the Realtors Association. So in 1947, the Realtist organization was started, and we stand for democracy in housing. So that's a little bit about the Realtors, about Infinity Investments, the brokerage. We specialize in brokerage and acquisitions of small to mid-size apartment buildings. That's our sweet spot. We also do a little bit of industrial and office real estate as well. All right, so let's dive right into it, all right? And we're talking about a market cycle. In the book, Timing the Real Estate Market, Craig Hall talks about that there's 7 major trends that impact real estate cycles, regardless of, kind of where you are. The first 3 are national level. All right. The first 3 trends are things that affect things nationally, and I think now it's safe to say globally. And these are inflation, interest rates, and flow of funds into real estate. All right. The last 4 are primary local level issues. And as we all know, real estate really, really is a local business. All right. And so number 4 is job growth. 5 is in or out migration. 6 is path of progress, and 7 is new construction. And what he says about national trends is that they directly impact cap rates and indirectly impact NOI, net operating income, while local trends both affect cap rates and NOI. All right, and the collective interaction of these trends is what moves prices and causes variances in the highs and lows and cycle duration. All right, so it's that interaction of these trends that moves the prices. And in this last market cycle, we saw prices move very wildly. But in the Great Recession, that's not a typical movement of a market cycle. Okay, in the 80s there was the saving and loans debacle. In the 90s we had a recession. It was a Gulf War. Inflationary periods in the 70s, so on and so forth. There's always adjustments and there's always ebbs and flow in real estate, and that's how cycles work. The impact of these 7 trends is kind of what makes the prices, rapidly rise or rapidly fall, or what's the difference between the peaks and the valleys. Speaking of peaks and valleys, we'll look at a chart of a typical real estate market cycle. And you'll see here, beginning of a cycle runs up, top of the cycle, the trough. So, and this is how it goes. Now, here's what's interesting. And the 7 trends really impact the price difference between the top and the bottom and the time difference, okay? How long does this take? Many people say in the Great Recession, it was a 4-year kind of downslide. It felt like the top of the market was here in October 2008, and then it just dropped off, right? And that's kind of what it was. It did just drop off, and it kind of lingered and lingered. And then about 2012 or so, we started to come back up. All right. Where are we at today? A lot of people have a lot of different opinions about this. Prior to the pandemic, I think we were about right here, right after this peak. All right. I've been saying for the last 18 months, I think we're peaking out. I was surprised in 2018 after I did my first presentation on time in the real estate market that the market continued to shoot up. But I do think even before the pandemic, transactions were boisterous, things were happening, still getting multiple offers, but I think that we had kind of begun hitting the peak of pricing. Certainly now, I don't exactly know. I'm not an economist at all. Just I'm a broker and investor, feet to the street though. I do think we are off that peak. I don't see a scenario where we come out of this pandemic and then prices shoot up. However, the good news is I don't think that the drop from this peak to this valley is going to be as significant as it was in 2008, 2009. I really don't think. I mean, in certain areas, we saw a 70% drop in prices. We saw 50% drops in prices. We saw vacancy rates in certain areas spike to 50%. I mean, I don't think we're going to see that, although who knows, right? But that's not what I think that's going to happen. I think this from peak to valley is going to be a much, maybe a 10%, 15% drop. And I think it's going to happen a lot shorter, and we'll get back to, kind of rolling up again. But just some perspective that, look, it doesn't always go up. It doesn't always stay down. Sorry about that. It moves in cycles. And over time, from the beginning of cycles to here, it is moving up. So if you've owned property for 30, 40 years and you roll through a couple of cycles, at the end of that 30, 40 years, hopefully you've paid your property off and your property is significantly up in value, like a lot of clients I know. All right. The key is trying to figure out where we are in any one given time of the cycle and make some wise investment decisions during that time. Okay. And there's a couple different strategies that Craig Hall talks about within the book. And one of the best strategies for buying property is what's called a contrarian, timing strategy. That's when basically you buy when there's blood on the streets. You buy in a down market, okay? And it's called counter-cyclical or a contrarian approach in real estate investing is when you buy when others are selling out of fear and desperation. And he quotes Warren Buffett in the book, says, be fearful when others are greedy and greedy when others are fearful. I don't think greed and fear are things that none of us should operate, but that's just, just some words from Warren Buffett, meaning that when everybody's selling out, you might want to think about buying. Okay. When everybody's buying and going crazy, I want to think about selling, at least evaluate it. Okay. And then the bottom line here with the contrarians is they're buying before the real estate market begins to improve. And I could think of a couple investors I know, the top apartment guy, I know I won't mention his name, but he's very, very good, great client, great friend. And it seemed like he had a crystal ball because he sold a lot of his buildings in 2007. And then when the market hit the fan, we were out hunting for apartment buildings. And I sold an apartment building in Oakland at like 47 grand, 46 grand a door in 2009. I believe he refied that building a year or so ago. So that was 81 units. He bought it for 3.7. He refied it. It was worth like 14 million, right? But when he bought it in 2009, there was still blood on the streets, man. I mean, we didn't know where the bottom was. The financial experts did not know where the bottom was. There was this whole thing about toxic assets and the financial system, the sky was falling. I presented that deal to about 50 people. He was the only guy to swing the bat. Fast forward, I mean, he's bought and sold probably over 1,000 units in the Bay Area in this market upswing. So he's done very well, right? Using this contrarian timing strategy. So that's when you buy when the blood's on the street before the improvement happens. Okay, takes a little bit of risk, but I think when you look back at it, it's actually a lot less risky. You just need to know what you're doing and work with some people who know what they're doing. And so I think we're going to see some great buying opportunities over the next few months and maybe a year or so. Now, another buying strategy that he talks about in the book is the momentum timing strategy. And this is where more investors where more investors tend to fall under, is this momentum timing strategy versus the contrarian, because people really think people feel more comfortable when they can see a bottom under the market and they can see some improvement. And there is, I know also a lot of people who bought 2014, 2015, 2016, who've done very well, who've done very, very well during that momentum when the market cycle is moving up, right? So it's important that you kind of figure out what works for you. But just to break it down a little bit more, it says buy once it is clear that the real estate market is starting to recover from the low point in the cycle. And let's the market's upward momentum carry the price higher in combination with improvements you make in the property. Okay. And basically the momentum strategy can be applied to any class of real estate, multifamily, industrial, single family, so on and so forth. But also, he says here, be prepared to sell before the down cycle. And that's what the momentum timing strategists really do. They like to get out before there's a downward cycle and kind of like at the top or close to the top. And so these are just some keys to think about. And a lot of people maybe feel a little bit more comfortable once the dust settles, once there's a clear bottom. There's more money to be made, I think, when you buy when there's not a clear bottom, maybe a little bit more perceived risk. But I think a lot more investors are comfortable with the momentum timing strategy. I think you've got to figure out for yourself, what's going to be your strategy. And every investor is different. Your capital position is different. Your existing portfolio may be different. The product type that you own, I think that's a huge thing right now. And I'll give some guidance on that in a few slides. But that's what kind of properties you own is going to dictate your forward moves, and also whether you exchange it. Are you just looking to acquire properties, or are you exchanging out of a property to another property? So all those types of things are going to help you to decide what kind of strategy you want to employ. But the key is to have a strategy. And I think that's very important now. Today is April 8th, 2020, right? And so we're in the smack dab in the middle of this pandemic. And the key, I think, coming out of this is having a clear strategy, having a clear plan, having a team that you work with. It doesn't really change. That's the same whether you're in a crisis or when you're not in a crisis. But when you're in a crisis, even more so is when you need to be dialed in and you need to be tapped in to first of all, your game plan, your strategy, your team, your approach. Don't let all the outside noise sway you observe, learn, go grab information, but don't be easily swayed. I think that's what I want to, the message I want to get out there to, my network, my clients, my associates, my friends, my family is, look, let's have a dialed in strategy. Let's have a plan and let's work as a team. And me as a broker and running a company, the reason I do a lot of seminars now, webinars and events like this is that I saw a need in the real estate market that a lot of investment seminars they give you a little bit of information and then you've got to spend a lot of cash to go to get the real information. And a lot of times that's just, how it is. When I came up in the seminar circuit, I learned a lot from just going to getting a little bit of information. But I knew that the real information, you had to go and pay thousands of dollars to. So what my goal is in doing these meetings is to give you some real world information that you can use in your investing career in hopes that we can be connected and possibly do business. So that's a big part of my strategy, right? So if you like, for instance, if you like this, if this is a video of value, click the like button, make a comment, subscribe to the YouTube station. There's not a cost. We're going to continue developing content. And for investors who are looking for deals, when we come across a deal, guess who we're going to call? Guess who we're going to email? Our network, our database. So just before I move on, you got to figure out how you want to time the market and what strategy you're going to use. But I even think above timing is, what is your strategy going to be overall moving forward? And whether you're contrarian or your momentum, think about it, figure out what's going to work for you, and then figure out a team of people that you can rock with, that you can go into war with, that you can, laugh with. That's critical, guys. Critical. Okay, now selling, also a very important part of, probably the most important part of timing the real estate market. Buying is important, but you can almost, if you buy the property right up front, you can almost weather the storm, right? If you got cash flow coming in and maybe the market went down, but you still got income coming in, it's selling that is really important, that you time things right. And he says here, it's important to start the sale during the upward cycle, right? And not get greedy trying to wait for the highest prices at the top of the market. Now, like I said, I've been doing this presentation a presentation on timing the market for the last 18 months because I felt like we were getting closer to a peak, or we were at the peak. All right. And I talked to a lot of clients who were thinking about selling. Some clients who last year was a great time to sell, just a great time to sell. And a lot of people sold. Some people wanted to hang on. If you're going to hang on indefinitely, that's one thing. But a lot of people were saying, I think it's going to go up some more. I think it's going to go up some more. April 8th, 2020, I don't think it's going to go up some more. Not in the short term. You know what I mean? I think we're going where I showed you where I thought the market cycle was. I think you need to be prepared for that, right? If you need to sell right now, and there are people, I've got a couple listings where people, they're not in foreclosure, they're not in situations, they really would like to sell right now, okay? That means we just got to double down. We got to go hard as brokers, agents. If you're out there listening to this, you got to go the extra mile to sell property. We can't even show occupied properties right now. Doesn't mean you can't market them. Doesn't mean you can't make calls. Doesn't mean you can't communicate with your clients. Doesn't mean you can't do that stuff, right? So we need to put our hard hats on and go to work. The key, though, if you own real estate and you're thinking about selling it, you want to time it before the peak, right? And if it peaks out a little bit more before you sold, all right. Much better situation than if you missed it and now it's coming down. You know what I mean? Now, if you're in that situation, if you were thinking about selling and now you, like I'm saying, I think we kind of passed that peak, maybe reevaluate your plan. Maybe it's not the best time to sell. If you do really want to sell, maybe you own some property and you're in, let's say, hospitality, and you're like, hey, I want to get out of this hospitality and go into another product type. I'll give you some ideas at the end of this what I think you can do. People in hospitality right now, it's tough. But maybe you own retail and you say, I need to, get out of this product type. All right. So if you're in that situation, what you may want to do is identify and upleg something that you can buy, and then look at a strategy to sell your property, either with some kind of creative financing or some kind of creative terms. The easy way is just to drop the price and turn and burn, but think about creatively doing a deal. Okay. This time of the market is when problem solvers win. Problem solvers make a lot of money. And so if you're in that situation, think about that. Sometimes it's hard to do an exchange while you're carrying financing and all of this, but if you're in a situation you're trying to get out now, then you need to get creative. All right. And maybe think about, okay, if I have a hotel, hey, maybe selling may be tough. What if I repurpose this? Maybe if we turn it into like a short-term housing, or we did a master lease, maybe we reached out to the hospitals and see if they needed to master lease some rooms for overflow or something to that nature. We reached out to the city and said, hey, you guys want to master lease some of these units for the homeless, like they're doing in San Francisco right now? Just think creatively is what I'm trying to say, because I do believe we missed the peak. Or just know that, hey, maybe you sell for a little bit less, or maybe you hold on. I want to give you real information. I'm the guy who gets paid for selling properties, right? I'm keeping it real. I'm keeping it 1,000 with y'all, because we have to give real information, and we got to operate in reality. We can't, looking at what happened in the last market cycle, people who, kept telling their clients, oh, it's going up, knowing it's not. That just didn't work. It was not a good strategy, right? Let's understand where we are. Let's make some quality decisions based on that and move forward accordingly. Not with emotions, not with greed, not with fear, with wisdom, knowledge, and understanding. That's what I'm talking about. All right. But yeah, I think we missed the peak of the market right now. It has moved on. All right. So what he says in kind of summation of the book is, don't get carried away with success and forget the basics. And I think that's important, because prior to the pandemic, a lot of people got carried away with success. Not like before, though. That's why I think it's not going to be a 70% drop in prices. Now, that's just my view. I'm not an economist. I'm not one. I don't know what's going on in all the world capital markets, but just feet to the street. In 06, 07, it was some craziness going on. I mean, just outright stuff that didn't make sense. Investors were doing deals on pro forma. I remember one of my clients told me about, he was in San Francisco, bidding on properties. He kept getting outbid by this family. It was like I think it was called the Limby family, and they were buying all these apartments in San Francisco, and they were getting like 90% financing. And I remember there was a lot of lenders doing 90% financing on apartment buildings. I mean, that's kind of insane, man. And we saw what happened as a result. So I don't think we've seen a lot of cash transactions in this last market cycle. We've seen a lot of 40% down, 30% down. The banks have made you jump through hoops and walk tight ropes to get a loan. So again, I don't think it's going to be like it was before. However, when you have some success, the key is humility. Humility is an investor's best friend. Don't forget the basics of the game. And I think that serves for all of us entrepreneurs, not just investors, but entrepreneurs and business owners as well. Business people, anybody, right? I coach football, youth football, and any sport, right? It's the point where you and you don't see as good in the rebounds. These are the things that are most important. And he says here, trend investing does not work forever. Good times don't last forever. And be careful either to get out in time or at least have your debt in comfortable shape. And that's what I want to talk to you guys about now, is making sure your debt, your mortgage is on point. Okay. And if you're able to do a refinance, do it. If you're able to negotiate with your lender, to stretch some things out or move some things around, do it. Put your debt in a position of sustainability. And I'll talk about that as we talk about guidance going forward. Now, moving on from the book, we're going to talk about just some basic fun, again, blocking and tackling. The cash flow model is key. It's the king. How we calculate income and expense, net operating income. You got to stick to this model, whether it's a up market, a down market, a sideways market, a pandemic. This is your guiding light. This is the North Star. This is your compass, right? And we always, when I do my presentations, I usually spend a lot of time on that. I'm not doing that today, but I at least want to make sure I drill this in, is that we, as professionals in the business, people starting off in the business, investors, developers, we all have to, stick to this model of making decisions based on the cash flow, because that affects everything. And we look at what our gross income is, take away vacancy, add other income. That's our effective gross income. We take away from that with our property operating expenses. That never changes. And we have to understand, though, right now is a very interesting time, because April is the first month where a lot of landlords are not going to get rent from their tenants. All right. And they're still going to have taxes, insurance, management, maintenance, all these costs. All right. So the net operating income is going to be affected. All right. And we're going to have to make some adjustments, because net operating income is the lifeblood of the business. It's the value of your property. Once it's capitalized, it's what you pay your mortgage with, and it's what you fund your cash. The whole purpose of this business, when you're buying properties, you want it, have enough net operating income to pay off your mortgage, and then give you some cash flow, or that you can put back into the property or put in your pocket. And, and that net operating income you want to grow over time, because the value of the property is based on the net operating income. All right. Because we take that net operating income and we capitalize it with the market cap rate, and that's your value. So as your NOI goes up, if cap rates stay steady, so does your value. All right. You have to make decisions based on the cash flow model. That never changes. All right. These are key indicators that just don't change. All right. Cap rates, and here we again, regardless of what the cycle is, you've got to understand, where the net operating income is, where the cap rates in the market stand. Now, I listened to a podcast or a webinar by Walker Dunlap, one of the largest multifamily Fannie Mae lenders, and they had an economist on there. He thinks cap rates are going to go up 1% to 2% in the short term while we're in this pandemic. He thinks it'll Q1, Q2 of next year, it'll go back to normal, but he thinks this year we're going to see jump of 1% to 2% in cap rates. I tend to believe in what he's saying, just because anytime investors see any sort of discomfort or uncomfortability, they're going to price that into the deal. That's how people do. So I think we're going to see an increase in cap rates, but you want to make sure when you buy a property that you have a target cap rate, something that you're shooting for. So you say, hey, if I'm going to go out and buy a property, it's got to generate a 7% capitalization rate. All right. And I've got some other videos on the YouTube station that break down capitalization rates. If you don't know what that concept is, again, go to our YouTube station, look at, just put in cap rates, net operating income, and you'll get some videos that break that down for you. Most people are going to have an understanding of what that is. All right. So you still have to make decisions based on that. Just know, I think it's going to jump 1% to 2%, depending on your area, depending on your product type. Hospitality properties have probably already jumped 1% to 2%. All right. So it just depends. They are going to rise, though. Cash on cash return, that is calculated by taking your cash flow divided by your initial investment. Okay. This cash on cash return should be higher than your cap rate, meaning that you have positive leverage. All right. Meaning that your interest rate is lower than your cap rate and you're making a spread on that money. So your cash on cash return, just as a rule of thumb, should be higher than your cap rate. All right. And your return on equity, that's the return of the equity that you have in your property now, is always going to be lower than not always, usually it's going to be lower than your cash on cash return. But this is a measure to figure out if your property, or how well the property you already own is performing. So if you're trying to make a decision on buying and 1031 exchanging, refinancing, or whatever, you want to evaluate your return on equity. All right. And then, as you're looking at property, look at the unit mix and its desirability. Okay. Some people like all 2 bedrooms, all 3 bedrooms. Some people actually like all 1 bedrooms. I think a healthy mix is great. But every investor seems to have their own unit mix desirability. When you're evaluating properties, keep that in mind, right? Typically, in most areas, you want to have a good mix of 2s and 3 bedrooms so that you can get families into the property. In areas like in the Bay Area and in LA, I'm sure probably in New York and in DC, densely populated areas, actually a lot of people prefer 1 bedrooms. They get a higher rent per square foot, and because we have rent control, those units typically tend to turn over a little bit more. So if you're in a rent control market, turnover actually can be good for you. Whereas if you're not in a rent control market, you probably want more families, you probably want less turnover. So it just depends. Physical condition, come on, that's like the basic real estate 101. We all got to make evaluations based on physical condition. Now, one caveat to that is anybody looking to invest with the Opportunity Zone Fund or in an Opportunity Zone funded property, that's going to require a certain amount of physical improvement. So you may want to find something that needs to get rehabbed, or maybe that's your model. But just understand, this has always been one of the biggest keys to evaluating property is the physical condition. Right now, this is a hard evaluation because if you have a property in contract, it's very difficult, especially apartment buildings, to conduct an inspection. It can be done, but you're dealing with occupied units. It's a mess right now, right? So all I'm saying is just, use your creativity to figure something out, because that's what we're all doing. I don't think I'm sure somebody will come out with like the guiding standard of how we do, inspections and appraisals on apartment buildings and other properties. Right now, it's a little bit of a mess. Obviously, if you got a vacant property, not that big of a deal. Okay. So, but just understand you got to do that, cycle or not, pandemic or not. And then what I always like to say is that what's the value add of the property? Is there value add potential? Even if you're focused of buying a property, and I have a client now, we're doing an exchange. She is looking for just a steady Eddie cash flow property retirement deal. Still makes sense though to find the value add. Is there something about this property? Is there something about this area that where we see there's going to be growth? Because if you're not going forward, if you're not moving forward, you're probably moving backwards. Even in a property that's like a coupon clipper, just cash flow, look for the value add potential. And that really comes into play to help out, especially in downturns or swings or calamity times. What can you do to add value to that property? And when you own property, always be looking to add value to the property. And the income determines the value, but I think the physical condition will help you get more income of the property, or the physical attributes or the physical amenities will help you to achieve more income. Okay, and a lot of landlords, especially in rent control markets, don't want to spend money on the maintenance of properties. The best landlords that I know though in rent control markets still spend money on their properties. It's becoming difficult, believe me, but they do, and their properties outperform everyone else. So those are just some key indicators, right? Because regardless of the market, you need to be looking at these things in order to make wise decisions. Now, where are we at today? All right, I want to lay that foundation before I go into what's going on today. And here's just a note, and this is a week old, right? Unemployment claims jumped to 3.2 million in the week of March 21st, up from 281,000 the week ending in March 14th. Last week, that number jumped from 3.28 million unemployment claims to 6+ million, and I believe it's somewhere above $10 million, 10 million people today, April 8th, who've claimed or filed for unemployment, man. And that's certainly the largest jump in U.S. history. Now, again, this is a result of the pandemic. This is not like, oh, the financial markets crashed, everybody's out of it. We at shelter in place right now, a good, and I don't want to say majority, but at least 50% of people are forced to stay inside right now, are not working essential, are only going outside to go grab some groceries or whatever, right? So of course that had a economic impact. 20 to 30% of the economy is on ice, and maybe it's a bigger number than that. And some economists are saying it's shut down, right? But I'm saying on ice because I know the people. I don't know everyone, but I know a lot of people who are ambitious, go-getters. But they just at home right now on ice. As soon as this thing gets back going, they're gonna get back out there making stuff, and in fact are doing the best they can at home, online, making stuff happen, right? But we're on ice right now, okay? 25 to 30% of the economy. So of course that has an effect, and it's going to take some time once we come out of this to get back, right? That's just, hey, that's the reality of where we're at, all right? So we got to make some plans accordingly. Also, what we saw, there was recently a $2 trillion stimulus passed. Stocks rebounded somewhat to an extent. There is mortgage relief for some. Some of the big banks are giving 90-day, kind of moratoriums on payment. A lot of the capital markets and the banks have received some relief. Small Business Administration is offering loans. These are great. Also, real estate's been deemed an essential service. I think, depending on where you are, right, in the country, in the state, it has been deemed essential service. Now, what in my county, where I saw as interesting as I read through, it said residential real estate was deemed essential, not commercial or industrial transactions. I thought that was, I don't think that's the case. I think all real estate's essential. Hospitals, that's commercial real estate. That's pretty essential right now. You know what I mean? But nonetheless, that's what the order says. So there's no open houses or group tours. Now, to get some clarity on this, I put private tours. There were no private tours allowed. The guidance on that from the Association of Realtors says that you can show properties that are vacant, not occupied. Okay, vacant, you can show not occupied. And if you want to show a client, you have to practice the social distancing. They got to stay 6 feet away from you. You got to walk them through there and follow all these protocols, right? Inspections and appraisals right now, very difficult to execute. I know they're doing a lot of drive-by appraisals. We have an appraisal scheduled on a property next Wednesday. Very intrigued as to see how that goes. But this is just, kind of what we're dealing with here in California. I think all throughout the state, for sure, in the Bay Area, all of our counties and Sacramento County, shelter in place, the stay-at-home order has been extended to May 3rd. I totally think they're going to extend that out. I could be wrong, but they probably going to extend that out, the way this is going right now. So this is a real effect right here. This is not, oh, well, it's just something that's going on, in the healthcare world. It is, but this is a major economic impact, right? And so what does that mean is what we need to try to figure out. Well, many tenants are out of a job and are not able to pay rent, right? Some tenants may retain their jobs, but they're going to want to hold on to cash. They don't know, they may have their job and they're paying, but they're just sitting here saying, hey, we don't know what's going to happen. So people are hoarding their cash. I went to the bank the other day. It was a line around the corner to get in the bank. And a bunch of people taking money out of the bank and this and that. So people are unsure and they're trying to hold on to their cash. They're not trying to give it to their landlord. Also, there is a moratorium on evictions. And I believe in California now, it's 120 days. I put here 30 to 60 days. I think most places are 30 to 60 days. They're saying, hey, hold off on evictions. This is a worldwide crisis. People can't go to work, so they can't, their employers are not going to be able to pay them. They're not going to be able to pay you, right? All of that being said, what that means is, hey, a lot of landlords are not going to be getting their rent money, for apartment buildings, for office buildings. Because and it's probably worse for office buildings and retail buildings than it is for apartment buildings. At least a lot of apartment owners may have Section 8 or some sort of subsidy where their tenant is paying, or their tenant is an essential service. There's whole office buildings that I know that the landlord is not going to be receiving rent. All right. So understand, not the end of the world. That's just what we're dealing with today. All right. Some mortgage landlords will get mortgage relief, some will not. All right. Uh, the guidance on that is you need to be talking to your lender like now, like yesterday, trying to work something out. This is not the time to go dark and disappear from them. This is the time to kind of get in front of them, even if they're the type of lender. And I couldn't imagine a lender right now saying, hey, tough, pay us. But there are going to be some in the landlord world. Now, in the consumer world of residential real estate, they should all be given mortgage relief. Now, whether that's going to happen, I can't say at all. But in the commercial real estate, there's going to be somebody not getting that mortgage relief. We know that. We don't know who and how and all that. But even if you get mortgage relief, even if on your residential property, most of what's going to happen is you're going to have to pay a lump sum back at one time. For the 90-day mortgage relief, I know, for instance, U.S. Bank, they'll give you 90 days, no payments, even on your residential property, commercial property and investment properties too. So U.S. Bank is being responsible, but to an extent, because at the end of that 90 days, you got to pay in a lump sum, right? I know for a fact a lot of homeowners, you know, you live in check to check, it's rolling, it's good, but making 3 mortgage payments at one time, that's going to be tough. And hopefully the lenders will work with you at that time, and we'll work to extend something out, and work that out. Landlords, the lenders are not going to be as gracious with you as they are with the consumer, because the laws allow them to do that, right? When it's commercial investment world, we're all considered to be big boys and girls, and they're like, hey, you got to figure this out on your own. Now, again, hopefully, clear minds will prevail. We can negotiate stuff. We can work this stuff out. And that's the point I want to make, guys. I want to say, hey, if you're a landlord, you own a bunch of properties, don't panic, don't freak out, get on the horn, talk to your lenders, reach out to your tenants. All right. Not a time to be landlord tenants fighting. And here in the Bay Area, landlords and tenants are always at odds, man. And so, for good, bad, and different, landlords and tenants always fighting. Look, guys, this is the time to try to figure some stuff out. We're all in a tough spot. So if you're a landlord, don't just, these crazy tenants, they're not paying rent, they're evil, and my mortgage company wants their money. And take a deep breath, talk to the mortgage company, reach out to the tenants. Some of them are not going to be able to pay you. There may be somebody in there who is an essential worker who is able to pay you. And so this is just the time, I think, to develop relationships, not time to panic, all right? Another thing to think about is that some lenders, while the Feds cut interest rates pretty dramatically, some lenders have actually raised interest rates and are tightening their lending criteria. I talked to one banker, not going to go give their name, but they were saying that when the Fed dropped their interest rates twice, they got so overwhelmed with loan applications for refis that they had to shut it down and say, hey, you know what, we actually got to raise rates right now to cool off this demand, because we can't process and deal with all this stuff, right? So, we've actually seen that, particularly in apartments for sure. Now, I think that was more so a couple of weeks ago. I think things are settling back down from a couple of lenders I know saying, hey, their rates came down this week. That's great. And again, I'm just giving you feet to the street analysis, right? I'm not looking at the charts and the figures and the 10-year treasury. I'm just telling you, as a broker and investor in the market every day, I'm talking to lenders every day, and this is what I'm hearing. Now, on the SBA side, SBA is really stepping up, not just for property owners, but also for businesses with loans, with relief, mortgage relief, and so forth. And even real estate agents and brokers have an ability to get I believe it is I think up to $10,000 loan or some kind of a grant, some kind of help. Point I make on there is don't count on it. If you're a real estate agent, think, hey, I'm gonna get this 10 grand from the government, I'm gonna chill. Don't count on it. I mean, it may come. Put the application in if you feel the need, but don't count your chickens before the eggs hatch, right? So just continue your grind, continue your strategy, continue your plan. I think there's A lot of different. What I love about the economy today is there is a lot of information out there on places like YouTube and podcasts, and there's a lot of people. What I see as a common theme, I think successful, and that we're employing in our brokerage is now's the time to communicate to your existing clients, check on them, touch base with them, not even in a, hey, are you looking to buy or sell right now? But in a, hey, how are you doing? How's the family? If you need any help, let me know type of thing. Because when we do come out of this, people are going to remember that. People are going to remember who reached out to them, who touched base with them, who followed up with them. And I'm also saying that to myself, man. Every day as, we're trying to push forward and do that and do it in a more efficient manner in our company. So just the bottom line is don't rely on, hey, I'm going to get some government relief. That may help. That may come through. Don't rely on it. Continue to hunt. Continue out there. Continue to solve problems. All right. Now, talk a little bit more about defaults and so forth. Now, of course, we're in a recession right now. I think all the numbers and reports going to come out in a while and talk about that. But of course, we're in a recession. All a recession is a contraction of the GDP. 25 to 30% of our economy is on ice, maybe more than that. So of course we're in a contraction. How much? We'll find out soon. All right. But bottom line, we're in one. All right. Not look. You lived through the Great Recession. That was crazy. This is different, but we're in it. So let's navigate through it. All right. Pricing, as I showed you before in the presentation, I think we have moved beyond the peak. My thoughts. All right. I don't see how we're going to come out of this and prices are going to shoot back up. I do see when we come out of this is demand just for stuff in general is going to shoot back up because we've been in the house for a month or 2 months or however long, right? I just don't see a scenario where real estate prices are going to shoot up. Heck, they are already high, and where I'm at Oakland, California, for the most part of the city, they're higher than they were in the last cycle in 2008. Certainly apartment prices, single family, most market sectors. So when we're in it, and I think it's going to take some time for us to navigate through this, people not being able to pay rent, people not being able to pay mortgages, getting back on track. It's going to take some time, bottom line. And I think we've moved beyond that. But here's one thing for sure, I think we're in a buyer's market. Well, right now, today, we are certainly in a buyer's market. But I just think coming out of the pandemic, we'll continue to be in the buyer's market. And that's just how it goes. It's been a seller's been calling the shots for quite some time. In the Bay Area, they've been calling shots since like 14, 15. It's been a 5, 6, 7 year run up of just multiple offers. If you got a listing, it's going to sell, just a matter of how much and how fast. We're not in that time no more, right? Just a strategy accordingly. However, there is liquidity. There's mortgage money out there. That's the big difference between now and the last market cycle. Last market cycle was more of a financial crisis that screwed everything up. This is a health crisis that's impacting everything, right? However, the banks and the mortgage companies of the world are well financed. They have a ton of liquidity. They do, through this stimulus, they just got read up, if you will. They got a lot of capital. What I can see clearly is that they're going to make it tougher to get that capital. So, word to the wise, when you're going for a loan application, it's been tough, but I think it's just going to be tougher. So you got to be very, I's dotted, T's crossed in order to get the money. And here's just some guidance I've got. Again, I watched the Walker Dunlap webinar. It was really good. And they talked about the commercial real estate markets particularly. And what they're saying is, particularly there's liquidity for multifamily and industrial properties. Of course, residential real estate, but we're talking about commercial real estate. There is liquidity, there is loans. Investors, lenders are bullish on multifamily and industrial. Okay. And I think, again, people still need to live somewhere. And with the economy shifting, and as we're seeing now, warehouses are in more demand than ever. especially with, products being bought online more than ever. Warehousing is critically important. Where the money's drying up is in office, um, but they're still getting office loans done. But retail, hospitality, retail is really dried up. Capital lenders are really not feeling good about retail. Retail's been having a tough last few years anyway. Just in general, retail property has been tough. It's been tough. We're in a shifting of how things are done. Again, more stuff gets ordered online now with this pandemic, and even coming out of this, I think it's going to continue. Right? Hospitality is tough right now. From Walker and Dunlap webinar, they said there are nobody making loans for hospitality right now. I was on a CCIM meeting yesterday. A couple bankers said the same thing. They're not doing hotel loans right now. Refis, new money, nothing. Okay. I know there's a lot of hotel owners out there. All right. Now it's just time to be creative, man. It's just time to be creative. You got space, right? And you may have a lot of vacant space. Again, what they're doing in San Francisco is a lot of hotel rooms have got snapped up by the city on a master lease to lease out to homeless. That may not be your ideal clientele, but it may be a way to keep the lights on. All right. Just know that there's not going to be mortgage money coming your way. If you need to, capitalize your property some way, think creatively, think long term. All right. But certainly in a changing environment, certainly a buyer's market. All right. One thing I wanted to point out prior to this pandemic, all right, we tracked the foreclosures in our office, right? Very small, and this is just Oakland, California, very small amount of commercial defaults. In fact, when we checked them, I think there was like less than 10 commercial defaults in the whole city. And that was really relatively unchanged from December 19 to March 20. But here's an interesting number. In December 19, we had ran a search. There was 122 residential defaults in Oakland, and that's going to be single family homes and condos. All right. Before the pandemic jumped off, there was 175 in March. Okay, so that's a 53. That's a jump in the amount of 53 defaults that were filed. Right. That's a pretty big increase. All right. It's a pretty big increase. That's about 25-30% increase from March 2020, or sorry, from December 19 to March 2020. Huge jump. All right. Now there's a foreclosure moratorium in place. Like there is a eviction moratorium, there's also foreclosure moratorium. So nobody's getting foreclosed on. Nobody's getting a notice of default over the next, I think, 120 days in California. However, what I think is going to happen when we get out of this, I think commercial defaults are going to rise sharply, and particularly like what we talked about, hospitality, retail, office primarily, and also some multifamily. We're going to see that. All right. How much? We don't know, but we're going to see it because there was a very low amount of commercial foreclosures going into this. There was a significant amount. I think 175 in my mind is significant compared to where it has been. If you'd have ran a residential default search a year ago, that number would have been like 50 something. And we actually last summer, our office, we started tracking, I think it was 66. And just to go from 66 to 122 is a big jump. And a big part of that, guys, is the natural real estate cycle. When there's a bunch of transactions like there's been, somebody's going to lose a job. Somebody's going to get divorced. Somebody's going to be in bankruptcy. Somebody's going to pass away. Somebody's just going to have a hard time, just in a good market, right? This is nowhere close to what we saw in 2008, right? But it is an increase, something to be aware of, right? And I think you're going to see a lot more commercial defaults when we come out of this, right? Just because some people are going to get the mortgage relief, some people are not. Some people are going to be able to negotiate with their lenders, some people are not, right? Just the reality of that we're in, okay? So, like with anything I do, I'm a positive, optimistic, have the glasses half full type of person, right? That's just how I operate. So I'm always like to give guidance, and I'm not just going to spit facts at you like an economist. I'm a deal maker, right? So I say, hey, what are some opportunities and some guidance during this time? First of all, I think bottom line, communication is key, all right? And this is something I'm preaching or I'm saying to myself in general. An area I've got to get better at individually. I've been looking at myself for the last year or two. Say, hey, I can talk good. That's fantastic, but I need to improve my communications. And I've been really working on that. And I think now is the time where all of us, no matter where we are in our level of communication, let's step it up. Let's improve it because communication is going to be key. Landlords, get in front of this, guys. Get in front of it. Let's just, it's not, oh, the tenants are evil. They're not paying rent. We're in a pandemic. I, you know, we're not, school is shut down. Everything's shut down. Church is shut down right now. Understand that and get in front of it, and let's use some thoughts. This might be you might have to navigate through some stuff, but this might be a great opportunity as well. So contact your lender now, negotiate with them, talk to them, figure something out. Okay, contact your tenants, see if who can pay, talk to them, work with them. While there is no evictions happening right now, at some point that's going to be lifted. And so maybe you can work out a payment plan with your tenants. Maybe they can't pay the whole rent. Maybe they can pay an amount. Talk to your property managers if you have property managers. Talk to your vendors. People who cut your lawn, people who provide services. Negotiate where you can negotiate, but just understand that we have to navigate through this. As a broker, I'm calling all my clients and saying, "Hey, what do you need help with? You need me to call your mortgage for you? You need me to call your vendor? How can I help you? How can I assist you?" Because, and I'm telling my agents this as well, there is no job description as a real estate broker. I mean, there's responsibilities we have. Our job or our business's description is to do whatever it takes that's legal, honest, and ethical to get the job done. So if you need to call your client's mortgage company that you sold them that bill, call them. If you need to call their landscaping, person, work out a deal for them, call them, make it happen. Yeah, that's not part of your business description, but it's called making it happen. You know what I mean? And I think that's what we need to do. Not panic, but take this time also to soak up and gain as much knowledge as we can. There is an abundance. What is good right now is the webinar world, the podcast world, the YouTube world is turned up right now. You can get some great knowledge and information right now. And if you're at home, take this time to get that knowledge, reinvent your strategy, adjust your strategy, tweak, make a battle plans, find out where the holes are, find out where your weaknesses are, and find out how to deal with that. Find out what your strengths are and figure out how to maximize that. Tap into a team, tap into a plan. Don't just be flapping out in the wind. Again, this might be the greatest opportunity that you ever had. You might have to navigate through some crap to get there, but hey, that's just how it goes, right? So if you can, at the end of this, come out better than you were going into it, all right? You think about the story you'll be able to tell your kids, your grandkids, think about the legacy, think about your portfolio. We just got to hold it together for a period of time, all right? Now, I'm also saying here, figure out your virtual platforms to run your operations, whether you're a landlord, you're a broker, whatever your business is. I am not technical at all, right? I tried to do a webinar a week ago. We had an audio meltdown. I wanted to punch. I probably should have punched it. Maybe it would have came on. Better audio, right? But I'm determined to master this thing, man, to figure this stuff out, because this is where we at right now, and however you run your business, whatever platforms you're using, master them. This is a great time to take a step back, figure out, hey, what can I tweak my website? Can I tweak my call system? Can I tweak this? Can I tweak that? Master your virtual platform. Also, tap into your network to figure out which associates are sitting on some cash and capital. Because like I said, this is going to be a great buying opportunity when you come out of that, when you come out of that, there's going to be a great buying opportunity. So, hey, maybe you don't have a ton of capital, but maybe your buddy does, and you know how to find deals, or maybe you know how to manage deals, or you're a contractor or something like that. See who's got some capital, and you guys can maybe team up when the time is right. Because again, like I was saying, this is like one of the best opportunities I believe we'll see. Um, and so we need to have, I think, an investment plan to do this, guys, to go out and solve problems. All right. And I think there's going to be a whole bunch of distressed properties at some point in time that are going to need to be traded. All right. So if you can figure out how to solve problems, you can win. And I want to say that in a way of not a time to be an opportunist, but I think it's time to solve problems. And in doing so, there's opportunity. And if you're a leader, you know how to solve problems. Okay. That's what you do on a daily basis. Take that skill and apply it to the marketplace. All right, here's just a couple of ideas, crazy ideas I had. Hey, if we are knowing that, hey, there's hotels that are going to be out there and that something's going to happen to them, maybe you can buy a hotel, turn it into apartments, or maybe you can buy a hotel, master lease it to a hospital, or something to that effect. Already, what's been a big trend I've seen in cities is people who to take old hotels and convert them into housing. In cities where there's a housing crisis, I think that's um, a great plan. Also, if you own a hotel, seriously reach out to the government, man, to your city, maybe in the federal government, to see, hey, are you guys looking to house some homeless? Do you need additional hospital beds? Maybe we can make we can make some of our rooms hospital beds that you may need. What I'm hearing is that a lot of the hospitals just don't have room, especially, I mean, in New York, it's bad right now. And across the country, I mean, the hospitals are overrun. See what you can do with your space that you already have to solve a problem, right? And then maybe if you're out there buying, maybe you can buy one of these properties and convert them into something that solves a problem. I know a couple of people that were buying retail shopping malls that were kind of almost lightweight abandoned and renovating them, making apartments with lifestyle retail. So like a movie theater or restaurants, and then a bunch of the vacant spaces, they're just making those apartment units. So I don't know what it is, but the idea is I just wanted to throw some ideas out there. Please, hey, if you got an idea, make a comment, and or maybe just keep your idea and go do a deal. But if you feel the need, I know there's a lot of smart people listening to this. Throw me a comment out there that the rest of people say what you think could be a problem-solving solution, what you think can be a way out of this thing, or what you think could be a good strategy to solve problems. I think that's what we got to do. We got to come together and say, hey, how can we, what's a great strategy? What's a great way of solving a problem? What's some great guidance out of this? Because if we can do that, then we can work through this, but not just work through it. We can break through it. We can go to the next level. We can have success, and we can do it in a way where we're not being opportunists, but we're being leaders who, grab on to opportunity and bring others with us. And I think that's the biggest thing I want to say. Be that person. Don't be the person taking advantage of people, but be the person solving problems and helping other people's out. There's a lot of profit in that. There's a lot of money to be made, a lot of things to do. And I wrap up out of this and say, hey, look, I've always been, always been a proponent of apartment buildings, particularly with Section 8 tenants, man. And I know a lot of people have opinions about Section 8, this, and that. Hey, man, not a bad time to own Section 8 units. Not a bad time to own Section 8 units because you're getting your check on the first. All right. Some of my best tenants have been Section 8 tenants. Some of my worst tenants have not been Section 8 tenants. All right. I've had a couple challenges with Section 8s, but I've had challenges I've had more challenges in my landlord life with non-Section 8s than with Section 8. And I've had some properties in some crazy hoods. You know what I mean? Just straight up. But again, my worst tenants have not been on Section 8. I've always advocated for Section 8. And I think now that if you buy a apartment building, consider Section 8 tenants, man. All you got to do is screen them like you would screen anyone else. You got to screen tenants. And that, hey, that check's coming, or that direct deposit is coming. So I would advocate, as I always do and as I always have, is, to buy apartment buildings for sure at the right price, that cash flow, and consider putting Section 8 tenants in there. Also, VASH tenants, veterans. I don't know what VASH stands for, but VASH is the organization like Section 8, but for veterans. They pay you, and they actually pay usually above market rents. So consider that, all right? Also, for agents and brokers out there, get set up to work short sales. I think we'll see a lot of short sales again. I think that the banks are learned from the last market downtrend that short sales are a much better way to operate than REOs. And I think if we're having the distress, they're going to want to get in front of it. So I think if you're an agent and broker, get proficient on that. But I again think I look for ways to solve problems with your client. Don't just hit them up with, oh, short sell your property. Really engage your farm, engage your marketplace, engage your database with some problem solving solutions. And I think transactions will come. I just think we'll see more short sales coming up in the near future. And I'll wrap it with this: is out of crisis is always opportunity. Just be a leader, not an opportunist. So it's been real. Thank you guys. Please, if you like this video, hit me up with a like. Hit me with a comment. If you got a negative comment, throw a comment. Tell me I'm an idiot. I want to hear it, and subscribe to our station. We're going to be coming out with more consistent content, as I think, as a way of communicating. So thank you all. God bless. Stay healthy. Stay safe.